stocks see some gains ahead of the RBI monetary policy decision on Thursday. Consumer durables and industrials lead gains, while utilities and autos drag.
Banks and NBFCs, including top names like HDFC Bank, HDFC Bajaj Finance and IndusInd Bank, report strong growth in advances and deposits for the fourth quarter, buoying sentiment.
And the windfall tax on domestic crude oil output is cut to nil and halved on diesel exports, offering some relief to producers. But the recent rise in global crude prices raises the risk of tax reversion.
CNBC-TV18 learns that a cabinet meeting is likely later this week or next week, at which the recommendations of the Kirit Parikh committee on the gas sector reforms are likely to be taken up.
Most experts polled by CNBC-TV18 expect the Reserve Bank to hike the repo rate by 25 basis points, but all eyes will be on the stance. The market fears the RBI may not clearly say it's the last hike, given global uncertainties.
Good afternoon. You're watching us here on Halftime Report on CNBC-TV18. I'm Manglam Malu. With me, the ladies in pink, Sonia as well as Ekta. It's looking not bad for the market. In fact, a 100-point gain is what we're seeing on the Nifty. 17,500 thereabouts is where we are right now. And this is not, something that anyone will complain about, mainly because the gains are limited ahead of the RBI policy meet. We will monitor all the developments out there. The Nifty Bank and the mid-cap index, mild underperformance out there, but after the big rally that we've seen in the past couple of days, no real complaints. Important updates coming in from all the companies. This one is Godrej Consumer, looks good. We'll talk about that in more detail in just a bit, but not bad.
Not bad. And can you allow me a joke? I mean, it's not very funny. It's not very funny. The market's in the pink of health.
I knew that was coming. I knew that was coming. Pink of health, yeah.
I was just thinking the same thing. I thought it was just going to be about the holiday. But nonetheless,
so
yes.
Last time we spoke about holidays, Ekta, you poured cold water by saying, the market's not doing well and all that, which is why both Sonia and I kept quiet.
And today, guess what? The markets are doing well and we have another holiday coming
up. Yes, we do.
Tomorrow. So now Ekta can't pour cold water over anything.
Yes. Well, for the Nifty, yes, definitely 17,500 is currently holding. So we're not complaining about the markets at all. We have the Bank Nifty, which is up around 76 odd points. We have the big MPC meet. So let's see. The Reserve Bank of India, remember, has hiked rates consecutively for 6 times all the way since May 2022. Let's see whether that trend breaks or not, whether there is any kind of change in stance. That is something that the markets will be watching quite closely. But the other piece of data, which is in fact a high frequency indicator, is auto sales. Auto stocks, in fact, are trading under pressure. This is after reporting mixed sales data for the month of March. Motilal Oswal, in a recent note, in fact, indicates the auto sector is witnessing demand moderation due to higher inflation and interest rates. Sonia, this is something that Maruti had also indicated in their commentary to us. What does Motilal say?
So, the Motilal report is very interesting. They've actually lowered their EPS estimates and earnings estimates for a couple of stocks. I'll tell you that in a bit. But the thesis is that there are there's moderation of growth that is visible across the auto sector. They've lowered their FY24 EPS for a couple of companies, both OEMs and the auto ancillaries. For Sona Comstar, for Endurance Tech, they've lowered it by about 8 to 11%. For Bajaj Auto, it's 5%. Now, if you notice something in common, there's the export factor here. So companies that have an export exposure because of the slowdown in the export market is something that they are worried about. They say that some of the earlier headwinds have receded, but there are new headwinds which are emerging now. There are signs of demand moderation in certain segments because of inflation as well as higher interest rates. The weak global macros have raised some fresh demand concerns for players having a global exposure, and perhaps that's the reason that explains why they have lowered the EPS for Bajaj Auto. They also say that commodity prices are seeing some inflation from the recent lows, so that will be an added, headwind for the sector. But they do like a couple of domestic players. Ashok Leyland and Tata Motors are their top picks in the OEM space, and in the auto ancillary space, they like Motherson Sumi and they also like Bharat Forge. But let's find out, what's happening in terms of the overall industry. Manish Raj Singhania, the president at the Federation of Automobile Dealers Association, is joining us now to give us a quick take on what the retail sales have looked like so far. Just to put it in a perspective, for FY23 as a whole, the total vehicle retail sales went up 21% for the industry, and the data will come up for you. Two-wheelers have done decently well in FY23, 18% growth, but it also came off a low base, and there was the post-COVID pent-up demand as well. Manish, can you tell us what is the expectation for FY24? the signs are ominous that there is a slowdown, especially in some of the pockets, you know, like export related or even in the small car segments like Maruti. Are you noticing that as well? And can you give us some key numbers?
So yeah, we have already seen post-COVID very high growth in auto industry, and I think in the coming financial year we expect a tapered growth. Maybe because a lot of various factors are getting influence in for the auto industry in terms of inflation, in terms of the world talking about the global crisis coming in terms of cost pressure that we are continuously witnessing, in terms of regular rate hikes, financial interest rate hikes, and in terms of a lot of we will be seeing 6 airbags norms coming in. Cost of vehicles are regularly going up. So a lot of various regulatory norms need to be complied at. So all these are creating a hike in vehicle prices. So considering, and we have already witnessed a very new high in auto industry in last financial year. So we do see growth in auto industry, but it would be majorly in single digit.
Okay. Mr. Singhania, hi, welcome to the show. Well, passenger vehicle growth, it was flat on a month-on-month basis, but it was up 6% year-on-year because of factors such as a low base, etc. as well. Now that you're sounding a bit cautious in terms of what we could expect going forward, what is the monthly run rate that we could expect in the passenger vehicle segment? Is there a possibility that we could see maybe even a decline on a month-on-month basis going forward?
So we are not, we don't say that we will be seeing a decline. Passenger vehicles has created a new record and new high in last financial year, and record sales happened. And maintaining that such a high base is very critical. What is good about passenger vehicle is a lot of models are still commanding a high waiting period, and a few models are available in stock and with good schemes available for the consumers now. So overall green picture for the auto industry, passenger vehicle as such, and we had saw a rush of SUV sales in last financial year, and this financial year we are seeing a lot of OEMs lining up their sedans for launch this year, and it may sedans had really vanished or like really tapered down last financial year, and we just saw the launch of Verna, and a lot of new exciting sedans are going to be launched. So maybe there would be a revival of sedan segment, and also we are yet to see the revival of the entry-level passenger car segment, where it has retails have substantially gone down, and we have been asking government that if for entry-level passenger cars, if GST can be brought down from 28% to 18%, that can really give a boost to entry-level passenger cars, because entry-level passenger car is an essential to mobility of people, and we don't have a very robust...
Yeah, Mr. Singhania, you have been asking for a lower GST on the entry-level cars for a bit, but I hope that for everyone's sake, the sedan segment also comes back. I'm a personal lover of sedans, as against Sonia, who likes SUVs. I just wanted to understand, what is the inventory level that the channel is currently sitting on right now? You said some vehicles have long wait periods, some of them have inventory piling up, no takers for them, which is why there are good deals, etc. on them. At an overall aggregate level, what's the kind of inventory that the channel is sitting on?
So in passenger car segment, the inventory level goes up to 37 to 39 days. There is a clear segregation of two types of various models available with every OEM or every dealership. There are models which are commanding very high waiting periods, and models which are ex-stock or ex-showroom available with the dealership, commanding now very good consumer schemes that had really vanished during the COVID times. Now OEMs and dealers have come forward offering good schemes to liquidate these stock vehicles. What the OEMs really need to do is recalibrate and start manufacturing the vehicles which are heavily booked, rather than just building up stocks at the dealerships.
I know your focus is largely on the domestic market, but I wanted your thoughts also on what's happening with exports, because Month after month, Bajaj Auto tells us that the worst of the exports could be behind them, but the numbers are not, not corroborating their view. Numbers are still quite weak, and this morning Motilal Oswal put out a report where they are saying that global headwinds continue to rise. Hence, companies having an export exposure could be further under pressure. Your thoughts?
So yeah, definitely, as I said earlier, global cues are not sounding very good, and we really need to see every second, third day we are seeing news on global recession, and a lot of countries are not playing up to the mark, or they are not able to perform as good as they should be doing. But as a country, India has been doing well, and we have been outperforming other countries. But exports will totally depend how their individual economies and how they individually progress. We are a very good export base here. We export a lot of vehicles, and we are setting up good factories and to export to various countries. But that really depends on their economic conditions and how they will recover the COVID impact fast.
Okay. Mr. Singhania, just a quick word with regards to tractors. This month gone by was mixed bag, but what is the projection going forward?
So yeah, tractors has not only proven as a means of agriculture support, but also as a term of employment. A lot of migrant people had migrated to their hometowns, and we can really see tractor sales creating a new high. And these migrant workers have also taken to tractors as as a means of employment. So we have been seeing a continuous robust sales in tractors. And if the monsoon goes on to be good, with the US already talking about the El Nino effect, if it doesn't affect our produce, then we see a consistent good growth in tractors in coming financial year.
Okay, all right. Thanks a lot, Manish, for joining in and speaking to CNBC-TV18. That's the Federation of Automobile Dealers, saying that at best it could be a single-digit growth for the auto sector in FY24. So there are definitely visible signs of a growth slowdown after FY23, which was quite a decent year. Let's slip into a quick break. On the other side, we'll get you more on the markets, a lot of stock-specific action as well. Stay tuned.
Welcome back. Well, quiet for the markets. At least there's no incremental movement from the last time we checked. So 17,500 is currently holding for the Nifty. So let's talk about specific stocks. Godrej Consumer is in focus. The company has reported its Q4 FY23 business update. Mangalam, tell us more. What are they saying?
Well, it's a good update that has come in, which is why, we saw a bit of an up move on the stock from the lows as well. Still sitting with a mild cut, but, it's good performance across what the street was anticipating. Because Godrej, the main thing is they want to see recovery in Indonesia, they want to see the India business do extremely well, and they want to see margins improve. All three of those things have happened. In India, they've said that consumer demands remain steady through the quarter, whereas the domestic branded business registered volume and value growth in teens. Of course, remember, a large part of volume growth will come by because the companies have taken price cuts also, input costs have eased. Growth in India has been led by double-digit volume growth and value growth in both their home care and personal care business. Indonesia has been performing badly for the last many quarters for them, and now there is gradual recovery in the performance. Mid-single-digit constant currency sales growth has happened, so that's a positive. And growth ex hygiene, which had a high base during the COVID period, is close to double digits. Godrej Africa, USA and Middle East, that has been growing in double digits for the last 8 to 9 quarters, if I remember. So there's been a bit of a temporary pause in the growth momentum. What does that mean? Instead of double digits, it's now grown in high mid-single digit sales growth. What does all of this mean for the overall consolidated business of the company? Double-digit revenue growth led in INR terms with mid-single digit volume growth and strong double-digit EBITDA growth. So obviously sales are growing, but margins are growing much faster. And this is a reversal of what would happen same time last year, where we would see sales come by because of price actions that the companies have taken, but margins would compress because raw material prices would improve as well. But here, now you'll have value growth and margins will expand a little faster. We've seen that in Marico as well.
Okay, that's on the Godrej consumers and the FMCG space in general. But Reliance, ONGC, Oil India are all in focus. after the government cut the windfall tax on crude petroleum to zero. In case you're wondering what the impact all of this would have, Sonal is joining in with the details. Sonal, over to you.
Well, it's a short-term positive, of course, for oil producers, the likes of ONGC and Oil India. The news is that the government has gone ahead and they've cut the windfall taxes on crude production to zero versus 3,500 rupees per ton earlier. Remember, it is the first time in 9 months that this has happened. The first time it was levied was back in July. As far as export duty or special additional excise duty on diesel is concerned, it has been cut to 2.5 rupees per litre versus 1 rupees earlier. On petrol and ATF, it continues to be nil. Now, CLSA says that yes, it is a positive for Reliance Industries. This is the lowest impact that they are seeing of windfall taxes on their diesel exports, so that bodes well for the company. Right now, these companies are making post-tax realizations of around $75 a barrel, and that's why they have a buy on oil and ONGC. But do remember, in last couple of trading days, we've seen oil spurt to levels of $85 a barrel because of the OPEC cuts that we've been talking about. That means that, yes, in the next revision, there's a possibility that these windfall taxes could come back. So while it's a short-term relief for these companies, in the longer term, we could see a hike in windfall taxes. So far, they've been able to make post-tax realizations of $70 to $75 per barrel. That could continue, and that is something that the street is analyzing and watching out for closely.
Okay, all right, Sonal, thanks very much for that. Well, really the sector of the day. But let's shift focus. L&T and NBCC are also in focus in today's trading session on the back of new order wins. Vivek Iyer is here with the details on both of these counters.
Well, absolutely right. So, Larsen & Toubro, after a while, you're seeing such a large order win. In fact, the company, categorizes this order win as a mega order win. So, what's actually happened is that the company has received multiple contracts, and the value of these contracts is over 7,000 crore, and this is for the hydrocarbon business entity of the company. So this is multiple offshore packages that the company has received, and this is from one of the largest clients that the company has in the Middle Eastern market. So the hydrocarbon business, for our information, is actually now housed under L&T Energy Hydrocarbon, that is LTEH. The other stock, of course, is NBCC, and other order that the company has got. This particular order is worth 448 crore. This is from the Ministry of Home Affairs, and this particular project is a road construction project in the state of Mizoram. So again, this particular stock too is seeing quite a bit of a spike up in today's trading session.
Okay, that's an NBCC. Avas Financiers, RBL Bank, Bandhan Bank, all are buzzing in trade after the Q4 business updates. Look pretty good. Abhishek is here with the highlights. Abhishek, over to you.
Well, loan growth has been the key factor for all the lenders, and it has been, very well taken by street as well. Now, Avas Financial, robust disbursals have driven the AUM growth. Disbursals are up 16.5% YOY and nearly 25% quarter-on-quarter. The disbursal to AUM ratio is close to 66-67%. Which is a good factor for any housing finance company. AUM growth is pretty robust at 24% plus YOY and about 7.5% sequentially. Asset quality has improved and liquidity in the balance sheet is close to 32% of the AUM size. RBL Bank, the CASA ratio is the best ever that they have recorded. Deposit momentum, however, is weaker than the industry average. So deposit growth is at just 7.5% YOY and about 3.8% quarter-on-quarter. The CASA ratio is at all-time high of 37.4% when compared to 36.6% in the previous quarter. Loan growth pretty healthy at 16% YOY and about 5% sequentially. The CD ratio that has improved both YOY and quarter-on-quarter. Liquidity coverage ratio now that's declined massively to about 126% when compared to 144% in the previous quarter. Bandhan Bank, the loan growth is impressive. However, CASA ratio also improved sequentially, which is a key factor which others are lacking. So deposit momentum is at 12% on a YOY basis and about 5.7% quarter-on-quarter. The loan growth is at about 11.6% quarter-on-quarter, and after some adjustment, it's at 9.5% quarter-on-quarter as mentioned by the management. The CASA is up about 14.2% quarter-on-quarter. The CASA ratio has also improved on a sequential basis by 200-300 basis points. Retail deposit traction remains strong. It has seen a growth of 0.2% quarter-on-quarter, and bulk deposits, they are down 0.35% quarter-on-quarter. So overall, good momentum in terms of loan growth and deposits for Bandhan Bank. Back to you.
All right, Abhishek, thanks a lot for that. So those are a whole host of updates coming in from the NBFC space ahead of the fourth quarter numbers. But important news at the bottom of your screen, and this is with regards to Reliance, where sources tell our correspondents that former Amul chief R.S. Sodhi may join Reliance Retail. Remember, R.S. Sodhi was the MD of GCMMF, which is the company that owns the Amul brand, and we had news that he had, retired from that position, so may join Reliance Retail. Reliance Retail, on its part, has maintained and has been talking about its expansion into the FMCG space, so they could do with the experience that R.S. Sodhi brings to that business. Take a short break, come back, get you more on the markets, and we have Aditya Agarwala joining in to give us some trading strategies. Right, we do have an update on the R.S. Sodhi appointment. It's likely to join Reliance Retail today itself, and that's the news coming in from our correspondents. We get you some action coming in from the F&O space. The Nifty is just above that 17,500 mark, an important zone where the market is right now. We're at the high point of trade, but remember, between 17,490 and 17,550 are two important moving averages. The Nifty, in the recent rally that we saw, crossed the 20-day moving average, and 17,490 is the 200-day moving average, above which we are currently trading. 50-day moving average is 17,542. So some congestion ahead of the RBI policy. The Nifty Bank, which is a mild underperformer in today's trading session, has strong support at the 50-day moving average, which it crossed past in the last couple of trading sessions, 40,705. The important index to watch out for today will be the mid-cap index. Why? Because it is underperforming after some outperformance, is absolutely at the flat line, and we have the mid-cap index options expiry today, which takes place every Wednesday. This is the second week this is happening, so we'll watch out for that. In terms of Nifty, a lot of active put writing at 17,400 and 17,500. The 17,500 put, which is closer to the strike price that we're at right now, has a premium of almost 60 to 70 odd rupees, telling you that levels around that 17,400 to 17,450 are likely to get bought into. So that's a strong support. But at the same time, we're still seeing 17,500 call writers extremely active. So maybe they are hoping for some congestion ahead of the RBI policy meet. The premium available at the 17,500 call is 60 rupees. So 17,550 to 17,560 could be a bit of resistance with strong support at around 17,450.
Okay, all right, Mangalam, thanks very much for that. Well, Aditya Agarwal joins in to discuss the technicals of the market. Well, Aditya, we've moved back above 17,500 for the Nifty. What is the momentum giving you in terms of an indication, and what would your call be, both for the index as well as specific stocks today?
Hi, Ekta. Good afternoon to Mangalam as well. Clearly, as Mangalam pointed out, we have entered a concession zone, and last four trading sessions have been extremely good for our markets. Don't forget that. From lows of 16,900, we suddenly saw a sharp up move, and we're sitting in four trading sessions at 17,500. Being a truncated week, obviously volumes have been little on the lower side. But we are heading into the congestion zone. At current levels, I would not be too inclined in going fresh long in the market. Because we are sitting on 1650 point rally on the Nifty, and second, this being a truncated week plus RBI policy meet, and the fact that Nifty is reaching a resistance zone. It also happens to be the gap area, by the way. So 17,530 to 17,600 is the gap area, where the 50 DM is also there, where the 200 DM is also there, multiple resistances. So I would avoid trading in the index, especially going long on the Nifty at current levels. A pullback of 150 point cannot be ruled out. If that happens, yes, then it makes a case or a chance for a long trade in the Nifty again. I don't see a sharp decline as well. Maybe a profit booking of 150 points. Same holds true for Bank Nifty as well. On the upside, 41,200 to 41,500 is the resistance zone on the Bank Nifty. On the downside, 40,700 to about 750 is a good support area. So both the indices, I believe, could see some bit of a profit booking from current levels. But yes, there are pockets which are outperforming, and I believe that will continue.
Okay, yes, there are pockets which are outperforming. I wanted to come to that because, even in the market, I mean, of course, today the market is quite good, but there are so many stocks which are hitting fresh 52-week highs. So, for example, something like a Siemens is at a fresh 52-week high. You have a couple of these names. Scient is at a fresh 52-week high. That's interesting. And many others, right, in the broader markets as well. Since you said that there are opportunities, what are the stocks that you like now?
Oh, absolutely, Sonia. In fact, the entire capital goods space has been buzzing around for some time. And despite the fact that markets have been in a turmoil, cap goods stocks have been in their own trajectory. For me, I picked up two couple stocks. One is Bajaj Auto, which is looking very strong on the charts. After their numbers, stock has seen a decent up move. And in the run up to the numbers, also stock did witness a good up move. At current levels, still makes a very good buy. Targets could be as high as 41.30, 41.50 on the upside with a stop loss at 39.50. A risk to reward in favor of going long in Bajaj Auto. Second is cement stock. Again, this is one space which has been completely outperforming of late, past few trading sessions and weeks. So Shree Cement is something which still looks very strong on the charts, and I believe there is more upside here. 27,000, 27,200 is something I'm eyeing on Shree Cement from current levels with a stop loss at 26,300 makes a very good buy.
All right.
Okay, all right, Aditya, we're going to let you go on that note. Thanks very much for joining in and giving us all of that perspective. Just watch out for Larsen & Toubro and the kind of momentum that we're seeing on that specific counter. It's gained around 7% on a year-to-date basis and is up around close to 3% at this point in time. Top gainer on the Nifty. Time for a break now, but once we come back, it is the big meeting. The Reserve Bank of India's two-day monetary policy is underway. We get you findings from the CNBC-TV18 MPC poll on what to expect after this short break. Stay tuned.
Well, to some important cues to track now, the Reserve Bank's two-day monetary policy meeting is underway with the rate decision due tomorrow. 90% of participants of the CNBC-TV18 MPC poll see rates being hiked by 25 basis points. My colleague Ritu Singh joins us now with the key highlights. Ritu, over to you.
Well, it looks like we're nearing the end of the rate hike cycle, but before RBI well and truly changes course, there could be one more hike in the April policy. 90% of our respondents expect that the MPC will hike repo rates by 25 basis points in this policy, taking it to a 7-year high of 6.75%. The culprit here is inflation, which remains stubbornly above RBI's comfort level. And of course, the other area of consideration for the MPC is going to be action by other global central banks, but RBI has maintained that it is guided by domestic factors. All of the respondents to our poll said that the April hike will probably be the last one in the current monetary tightening cycle, which began in May last year. The peak rates are seen at 6.75% by the majority, but after this rate hike, RBI is expected to pause for a while before it starts to reverse these hikes. So 40% of our respondents believe that we could only see cuts in the second half of this financial year, whereas a third expect the first rate cut to only be delivered in the first quarter of the next financial year. 30% expected to happen perhaps sooner. Now, RBI could also raise the CPI forecast for FY23 marginally, given the unexpected high inflation readings recently, while leaving the 5.3% CPI forecast for FY24 unchanged. Now, RBI is also unlikely to tinker with the growth forecast, although some expect a marginal lowering. Almost 30% of our respondents said they expect the stance of the policy to also be changed to neutral, but a much larger majority of 70% believe it will be left unchanged at withdrawal of accommodation because RBI may not yet be comfortable enough to signal that they are done with the rate hikes given the global uncertain outlook.
Okay, all right, Ritu. Thanks very much for that. So that's the key takeaways from our monetary policy poll. As we slip into a break, listen in to what Morgan Stanley's Chief Asia economist Chetan Iyer had to say on the RBI's action going forward.
RBI may not want to give it a clear signal that they are done. Most central banks around the world, RBA, Reserve Bank of Australia, yesterday also did the same. They paused, but they said that there would be a possibility that they would do more rate hikes. So I think it would be probably unlikely that the RBI gives a clear signal that this is the rate hike, this is the last rate hike. But look, in our forecast, we do think that this is the last rate hike. We think India can actually grow at 6.5%, but this weaker external demand will take some sheen off. And that's why we think growth rates will be closer to around 6.2. Look, I mean, if there is a deeper slowdown in the US because of this tightening of lending standards, you could shave off some more of India's growth. But broadly, the India story is really the best in the region, and also, in fact, I would say amongst the large countries in the world. I think that the services exports have been doing extremely well, and they have surprised on the upside, and the market share for India has now gone up to about 4.7%. So we think that, services sector is really the most important driver of current account at this point of time. And at the same time, we have also seen some upside surprises in the remittances inflows. So together, that's helped to keep India's current account balance in a reasonable shape. We're expecting it to be 1.9% in 12 months ended March 2023.
Right, so that's some view coming in from Morgan Stanley. Let's take a short break, come back, get you a conversation that we've had with Ajay Singh, who's the CMD of SpiceJet. Stay tuned.
Welcome back. Well, definitely in the pink of health for a couple of the indices. Mid-cap index is not doing too great, but it's a good advance decline ratio, you'd have to say, for our markets today. So around close to 4 stocks advancing, 1 stock declining on the National Stock Exchange. A couple of the Adani stocks are under pressure today. So Adani Power is down around 0.7%, but Adani Green, Adani Transmission, Adani Total Gas, a couple of these stocks are showing cuts of anywhere between 2 to 3%. Just watch out for a couple of the pharmaceutical stocks as well, which had seen a lot of traction or buying in the past couple of trading sessions. Case in point would be something like Lupin, which is up around 0.8% in today's trading session, just about trading with a gain of around 0.5% at this point in time, or 1%. The pharma index in the green as well. But the other space which is in focus is FMCG. Marico is trading in the green on the back of its Q4 update. Manglam, tell us more. We spoke about Godrej Consumer. What is Marico saying?
More of the same, the fact that the consumer sentiment continue to witness gradual recovery. However, a full-blown recovery will come by only once we have some clarity on monsoons and how the second half of next year will pan out. But in India, the volume growth for them is in mid-single-digit zone. Parachute coconut oil posted strong high single-digit volume growth. That's a positive. The other bigger positive for me is value-added hair oils touched double-digit value growth, and that's a positive because it's also margin accretive. Saffola oils remain stable quarter on quarter, dipped year on year on a high absolute volume base. So this gives you an insight into what something like an Adani Wilmar or something like Patanjali Foods would report as well, because same time last quarter we had a high base of edible oils itself. Their growth for foods, premium personal care and digital first brands continues on track, and as a result of which their consolidated revenue in the quarter grew in low single digits. But just like Godrej Consumer and all the other companies that are likely to report their numbers, gross margins for Marico expected to expand and drive reasonable growth in the overall operating profit as well. So as a result of which that stock high by about 1%.
Okay, well, the other stock that I'm looking at is Bharat Forge. Now, the reason I'm keeping the focus on that stock is because it's under pressure after the North America truck orders that came in. Overall for the industry have been under pressure. So both on a year-on-year and on a month-on-month basis, the North American truck orders have been weak. It's a 17% fall month-on-month, a 10% fall year-on-year. And, a lot of these companies, Bharat Forge, GNA Axles, have an exposure to the North American market. Madison Sumi as well, through one of their subsidiaries, PKC. So, all of this put together is dragging these stocks a bit. Now, FTR, which is the company that gives out these details, last month they said that a lot of the orders were piled up in Q3, hence Q4 could be slightly on the weaker side. Having said that, demand is still very strong. There's no issue with demand. Utilization levels have picked up. The balance sheets of the fleet operators are also looking quite good, and the new fiscal year is expected to be much better than the previous one. So in that context, perhaps this month was an aberration, a fall that we've seen, and just correction of the excess orders that we saw in the last month and in the prior quarter as well. But for now, this data is on the weaker side, and hence some of these stocks are under a bit of pressure. Bharat Forge has about 11% of its revenues that comes from the North American truck market. But let's now focus on SpiceJet. CNBC-TV18's Danish Anand spoke with the company's chairman and managing director Ajay Singh, and he's confident that the company will emerge stronger going forward. Listen in.
Firstly, the infrastructural issue of bringing aviation turbine fuel under GST, it's been a long-standing demand that will significantly, catapult growth in the sector. reduction of VAT on ATF by the states that have not done it. Of course, the government of India and the Civil Aviation Minister have worked very hard to see that VAT is reduced by several states. 19 states have reduced VAT in the last 1 year or so. So that's great progress. Of course, we will continue to work to ensure that India becomes a hub for global traffic. Traffic connecting Asia and Europe and Asia and the US needs to be hubbed in India, and we need to see much more growth in terms of connectivity to small towns and cities, multimodal connectivity as well in air, not only through fixed wing aircraft but also helicopters and seaplanes and in future drones as well.
Right. So very lastly, as far as SpiceJet is concerned, we have entered the new financial year. So how will SpiceJet really look like in the new financial year? Are you planning to make any new aircraft orders? And what are your plans of, taking
firstly, this is a ASSOCHAM press conference. I don't really particularly want to comment on SpiceJet, but SpiceJet is undergoing its own, restructuring and growth plan, which is on track. And some announcements have been made recently, and some announcements will be made shortly. But we are confident that SpiceJet will emerge stronger.
Right, some views coming in from the management of SpiceJet, confident that it will emerge stronger. What is stronger, however, is the market right now at the high point of trade, led higher by the Nifty Bank, which is picking pace now, which in turn is being led higher by HDFC Bank. HDFC Bank has moved to the high point of trade, so that's powering the Nifty Bank. And the Nifty itself is being powered by both HDFC as well as HDFC Bank, and some support coming in from the IT space as well. TCS, Infosys, both at the high point of trade. Take a short break, come back on the other side. We speak about commodities. Manisha Gupta joins in with Sushant Gupta, who's the director of Wood Mackenzie. Stay tuned. So we were talking about how the market's picking pace right now. Let's take note of a couple of other stocks as well, which have recovered from lows. ICICI Bank still mildly below the flat line, but has recovered about 1% from the lows. We have Bharti Airtel as well. Again, same fate as ICICI in terms of stock price, but is off the lows and currently just below the flat line. Tata Steel has moved higher, as has Tata Motors. But that's enough about equities. Let's talk about commodities. Manisha, what are you tracking today?
Well, I'm looking at the crude oil prices, and joining me is a very special guest. We have Sushant Gupta, director at Wood Mackenzie, now joining us live. Sushant, hi, good to have you. First question clearly is about OPEC and allies, because that is where we started this week with a lot of surprise really and a knee-jerk reaction. And much of those gains is what the crude prices seem to be holding on even now.
Yeah, thank you, Manisha. I think OPEC's decision to cut about 1.6 million barrels per day, from May until the end of 2023. Was a surprise. We believe it will provide a support to an already tightening market, which we expect in the second half of 2023. But I think, the market should realize a few things, which are behind the OPEC cuts, right? First of all, although the cuts, took market by surprise, the OPEC plus production was already running below their target. Right, so the overall cuts which the market will see, won't be the full 1.6 million barrels per day. Right. The second thing is, the reason for the cuts. Right. I mean, obviously, one view is to support the prices, which went down in the last few weeks, because of the fear and the risk driven by the banking crisis. Right, and plus we do have seen some weakness in Q1 demand numbers. Which may have driven, the rationale behind these cuts, right? But I think let's not forget the current prices where we are today. They are, back to where we were, a pre-banking crisis, at around $85 per barrel. So in effect, right, we're back to, a few weeks back when the prices were around the same level. So, the impact is not as dramatic as the market may, make it look like.
Sushant, when you speak about the first quarter demand, and as you mentioned, the demand growth wasn't as strong. I mean, do you have any numbers at hand on what the global demand was in the first quarter, or even Asia for that matter?
Yeah, I think for a global level, our current estimated the oil demand grew by around 1.1 million barrels per day. There was some weakness coming in from the US and also weakness coming from China, as we've seen some of the petrochemical projects were delayed in China towards the second half or next year.
And what are your estimates for the demand growth for this quarter?
Right. So for quarter two, as we estimate that the quarter two would be a much more stronger demand growth. So our current estimate stands around 2.8 million barrels per day of demand growth for quarter two. And that's why we were always saying that, quarter one in terms of prices, would be the weakest. As we head towards quarter two, the demand growth will be much stronger, partly driven by China. And that will support the overall prices. So around 2.8 million barrels per day of demand growth at a global level for quarter two this year.
Fair point that. The other thing that is supporting the commodities, especially gold and silver and also crude to some sense, is that much of the trade now is shifting out of dollar to the regional currencies. We've seen that happen with China, with Saudi Arabia. Russia also has been pushing for it. Is that in any sense changing on how the global crude trade will happen from here on?
Well, I believe, I think the overall shift towards other local currencies or trade in the local currency, I think it's a very small fraction of the overall US dollar trade, right, for the crude oil, right? So we don't think the weakness in the dollar, or for that matter the shift towards local currencies trade, will have a significant impact on the crude trade. The crude trade will be driven by, a much larger factors. One, the fundamental one is the oil demand growth, right? If India needs XKBD of oil to be imported, it has to import it, that crude oil. A large part is still driven by the US dollar trade, right? So, and the second part will be, the reshuffling in the trade we are seeing because of the Russian sanctions. Right, so we're seeing India buying more and more, Russian crude. We have seen, the highs of, India buying close to 1.3 million barrels per day of crude oil from Russia, which, from nothing, in 2021. Right, so so that will start to reshuffle the crude trade rather than the shift in the local currencies buying, which is still a very small portion of the overall US trade.
What is your sense on the crude prices going forward from here? I mean, as you said, the first quarter demand was weaker. So were the prices really? How are you looking at this quarter and the next?
So, just to put things into perspective, right? Quarter one Brent average was roughly around $81 per barrel, right? Now, I think as we move towards quarter two of this year, we do expect a meaningful appreciation in the prices. Driven now, by the first factor which I mentioned before was the stronger demand growth at a global level, driven by China particularly, and now with the OPEC plus production cuts, which will have some support to the prices. So overall for quarter two, we are forecasting the prices could appreciate towards $88 per barrel average for quarter two. But as we head towards the quarter three and quarter four, which is where we see the market getting more tighter, where we see prices could average roughly around $94 per barrel for Brent.
And how are you looking at the Indian demand growth going forward? I mean, we are importing cheap from Russia, and that is expected to continue for the rest of this year and perhaps longer. But what is your sense on demand here? And also, are you looking at Russian Urals as pricing policy?
Yeah, so so India's GDP grows by around 6.5% this year, right? It definitely is expected to be a bright spot in the global demand growth, right? So India accounts for about 200,000 barrels per day of demand growth this year, and India's overall demand reaches around 5.4 million barrels per day. Now, in terms of where this crude will come in, right? I mean, so obviously, as I was saying, Russia is a major part of India's crude imports. We have seen India importing roughly around 1.3 million barrels per day at max in the last few months. And we expect that to continue, one, because the Urals discount are running at $40 below Brent. And that actually facilitates a lot of the shift of this trade towards India and, for that matter, China. India would still need to keep on buying crude from the Middle East because, overall, India's import dependency is still close to around 88%, right? So it doesn't Russia's imports do not fully meet India's, crude import needs, right? It need to import crude from Africa, from Middle East, and also from the US. But India, it just gives, more diversification to India's crude import sources going forward.
Fair point.
Okay, all right, Manisha, thanks very much for that. So that's on Brent crude, $85 per barrel currently. For the markets, absolutely unfettered by what's taking place with crude prices. So the Nifty is holding at 17,526. In fact, building in terms of gains. So it's just been a one-way up move that we've seen. As you can see, high point of the day currently for the Nifty. Bank Nifty also holding up well, up around 0.4% in fine fettle for the markets. We need to wrap up on halftime report, but Business Lunch will take all the action forward. Stay tuned.